All right, everybody, welcome back to our True SMC trading concept that we've started last month, and we are still continuing, and we should be done very soon with this course. And I want to assure you that everything I'm teaching you, if you take it serious, you should be able to start making good trading decision for yourself in the market. You don't need anybody to come and say buy or sell before you go and sell in the market. No, you should be able to do that for yourself. You should be able to even train people to become masters like you. So you need to take these things seriously. Okay. All right. Today we will continue with IFCs, as I promised you in the last lesson that we will continue. So we are continuing with IFCs today. Okay. So if you have forgotten the things we taught in the last lesson, let me quickly recap them for you. Okay. So I talked about what IFCs, and I said these are candlesticks that took or grab what we call money in terms of structure, or let me say in terms of order blocks. Okay. And not in terms of individual candlesticks. Okay. Good. So these are candles that are sweeping external highs, internal highs, external lows, and internal lows. Okay, so as you know, we have what we call internal structure and external structure. So we have the candlestick structure and the overall structure. Remember, candlestick structure, order block, or POIs are different from individual candlesticks, order blocks, or POIs that we talk about. So candlestick structure can be used in this case, but individual candlestick cannot be used in this situation. Okay, especially when we go into liquidity, I'll be teaching you something we call the daily candle highs and low sweeps, or liquidity grabs, that help you to identify continuation or reversals in the market. So these ones don't work with this particular IFC that we are talking about. So on the daily time frame also, we will look at the structural highs and lows, whether internal structure or external structure. Okay, now, so let's say in this case we will be looking for the candle that took out the previous low or high and close above the low or below the high, to confirm that market is looking for the reversal, okay, or looking for the continuation. So if, let's say, we are in the bullish trend and market sweeps the previous low or the inducement, and candle body closed above the low of the inducement or the previous low, then we know that market is preparing to what? To move in the continuation of the bullish market. But if it, let's say, it happens in the bullish trend that the high, instead of being broken to create a break of structure, but rather it just sweeps the high and then closes candle body below the high, then we are going to look for a reversal for a sell. But in this case, it's going to be a short term sell. It's just like a scalp, because we are in the bullish trend. okay, and it's vice versa for the bearish trend. Now, these institutional candles, or what we call the IFCs, are mostly seen at the top and bottom of the structure. Their formation shows strong indication for reversal once market takes out the structural liquidity, or what we call money. Okay, now once this happens, all you need to do is to wait for lower time frame confirmation to buy or sell. Okay, now why do you have to go into lower time frame? Because in the lower time frame, we are going to use our entry strategies that, or entry models, that we'll be talking about after we talk about the types of liquidities. That is retail liquidity, session liquidity, daily candle liquidity, weekly high and low liquidity, and then chart pattern liquidity. Okay, I think that is going to be under even retail liquidity. Okay, once we are done with those forms of liquidity, then we are going to now go into our entry models, and under entry models we'll be looking at the shock, the flip model, and then the inducement model, okay, to make entries. But before then, you should be able to identify these POIs in the market. Okay, you should be able to identify the POIs in the market. That is the order blocks, the IFCs, and so on and so forth. You should be able to identify them in the market. You should be able to identify liquidity. You should be able to identify in your inducements your valid pullbacks and your valid structural formation. Okay, when is liquidity? Have I been able to locate liquidity? Am I going to become part of liquidity if I take trade where I located it, or am I not going to be part of liquidity? So SMC is all about identification of liquidity to avoid being part of the liquidity. So when I say being part of the liquidity, what I mean to say is that you are going to also be buying from where all the retail traders are buying from, and thereby you are going to end up losing your trade, just like they are also going to lose their trade. So in this smart money concept lesson or training that we are having, you are going to understand how to trade trend lines, how to trade support and resistance levels without trading it as support and resistance, but as an SMC concept person, because you will use that with the concept of liquidity to rather pinpoint the accurate IFCs and POIs or order blocks in the market, and pick reversals based on that to make the best trading idea or formula for yourself. So these are the reasons why we are learning all these things before we look at entry model. Because if I teach you that you do this and that to enter the market, to enter a buy or sell in the market, but you don't understand how to identify these key levels, it means you are still going to be trading like the retail traders. Okay, I can tell you that if you understand this concept that we are learning right now, if you can take 100,000 prop firm account and pass it within 2, 3, 4 or 5 days, maximum 1 week, if you understand the concept behind what we are doing, and you will not be liquidated or you will not violate their drawdown rules. This is the beauty of the game. You understand? So we spoke a lot about IFCs in the last lesson. Okay, so what I need you to understand is that this has to do with taking out of the previous inducement low or high. Then we shift to lower time frame to look out for entry when price taps into that zone. We look out for change of character, or if there is a flip zone, we use the flip concept to make entry. But today we are going to look at how we'll be able to spot these IFCs. And you know, I told you that there are candles that looks like hammer, okay, dojis, like candles that has long wicks that sweeps the high or an inducement, the low or a lower inducement, okay, to then close below. You'll be looking at that on the chart very soon for you to get the concept better. Okay, now when we get these setups in trends, it is called a high probability setup. So for instance, if we are in a bullish trend and we get market sweeping the low, okay, in the bullish trend, giving us the opportunity to take a buy trade, that is a high probability trade because we are still trading with the trend. But where we are in a bullish trend but market end up sweeping the high and giving us an IFC POI for us to be able to take a trade, a reversal trade, then that is called a low probability setup. You'll be able to sell, all right, but then this sell opportunity is going to be a low probability setup because we are still in the bullish trend. So you should know when to move out of that market. Your grid level in terms of this should be low when you are dealing with low probability setups. Okay, now another thing I want you to take notice of before I go to the chart is that in this let's say in a bullish setup, when market just sweeps liquidity at the high, you take a short-term sell, but when it sweeps low, you take a long-term buy. Good. When price sweeps previous reversal high or low, which acts as a POI, then we can sell or buy based on our trend on lower time frame. Guys, let's dive onto the chart and let's see if we can spot some of the IFCs on the charts based on what we learned last week and the recap we just did right now. Let's base on that and see if we can locate some of these IFCs on the charts. As you can see, this is a fresh chart. You guys know I always open fresh charts during class before we all work it together. So it's not like I've gone through this chart. Otherwise somebody can mention his own chart and we will look at it. Okay, let me pick a new one. Let me see. Mostly I like trading major pairs and gold, like Euro USD, GBP USD, gold, Oxy USD. Yeah, those are my favorites. Okay, let's see GU. Okay, let's take GU and let's make some examples from there. Okay, all right, so this GU chart, this 15 minutes, so it means 15 minutes is representing my higher time frame. One thing, if you make your analysis on daily time frame, that means your entry should be on either 1 hour or 30 minutes. If your analysis is on H4, your entry must be on 15 minutes. Somebody said my voice is going on and off. Are you all experiencing the same thing? If not, then it means that person that is having that issue should check his or her network. Okay, all right, so as I was saying, if it is H1, then your entry should be on 5 minutes. If you are doing your analysis on 30 minutes and 15 minutes, then your entry should be on 1 minute. Okay guys, that should be at the back of your mind whilst we dive into the show. All right, so first things first, as you know, we need to look out for our trend. Okay, so where is our trend? That is the first thing we need to look out for. So as you can see here, market has been on a bearish trend. Then we can see market now has changed into a bullish trend. Yeah, because this is the last low, which means this is the previous high, because there is inducement that has been formed here to give us this last low here. So previous low, previous high, previous low. Okay, so this inducement taking out confirm this low. So as price has taken out this level, it means we have changed character, so we are into a bullish move now. Please, if you are this your first time here, maybe you didn't get how I have gotten these things I'm talking about, please do well to watch the previous lessons. They are all on my YouTube channel, Accurate Peeps. And if you are on the WhatsApp page and the Telegram page, I always drops the videos there. So go back, watch from lesson 1 right down to this particular lesson, so that you'll be in alignment with what we are doing. Okay, all right. So since we know we are in the bullish trend, let's see if we can get some example within that. Otherwise we will come back here and see if we can get some examples from this area. Okay, all right, so let's get this done. All right, so now I can increase this chart. Let me zoom in. Okay, so we said both the internal structure and external structure, we are looking at the highs and the lows of them, and then don't forget all the conditions supposed to be valid: imbalance, sweeping of the previous candles high to give you the best, order block area. So all those things should be in play. Okay, so don't forget about that. Now let's see in this leg. Okay, after the inducement, and we have moved into how do you call it, bullish trend here, because we took this high. Okay, we break this high here, so that is change of character. This inducement confirmed this low, then this change of character occurred, and there is inducement that took place here to confirm this high over here. So this was our high, sorry, this is our new high, because this guy didn't close below to give us this. If it has closed below here, that is when something like this, before this, we would have given this as our first high, because this area was the inducement. It didn't close there, it just give us a pullback, and then we had this. So this guy closed below, so that is why our inducement is here. Okay, all right, so we have our inducement over here. So as you can see, I'm using everything we have learned previously in working with this. So this is just a high here, normal high, not a valid high, a normal high that has been taken out. Then we now created the actual high, because we have changed. So now if market opens tomorrow Sunday and we have candlestick closing above here, then we can now confirm our new low, and then we'll be expecting, if let's say there was some inducement before this movement, we'll be expecting the inducement to be taken out. Okay, we expect the inducement taken out, and then maybe we create a new high to continue the bullish trend. But if that doesn't happen and this guy decides to come back and take our last low down here, this low over here, if you guys remember what we learned during structure, if we decide to come and take this guy here, then that means we are going to have a change of character again, which means this change of character was just a temporary or a fake change of character. All right, so now we've confirmed we are in our bullish trend. Okay, so let's see over here. Over here, this is our last low. Before this is our previous low. So this is break of structure, then we have our last low here. Now this is what we are saying. After the formation here, we have this valid pullback, then we push down. Now because this pushback here was valid, that was our inducement that confirmed this low. This inducement here, this small pullback, is our IDM that confirm this low. Okay, now after that we had this low created, we have this push, then look at this, there was a sweep of this guy swept this side, but candle body didn't close below this area, so we cannot consider this guy as an IFC. Okay, the next sweep we have was down here, but it wasn't the sweep of this low. Okay, it only swept the low of this candle, so that is kind of forming what we call order block. Okay, so if we were dealing with order blocks, then we will be looking at this guy over here that has swept this candle low, and we'll be marking this, which later on price came to what? Tap in. Now here also price sweep the top of this previous high, but candle body didn't close below it. Okay, you coming? Think. Yeah, so this is one example. Candle body close, as you can see, candle body close below this guy, but per our rules the body of the candle is too much. We are looking at hammer, hanging man, doji, and so on. Okay, so when we have any of those types, then that is where we can consider it as an IFC that we can look at, and then we will take trades based on that. Okay, as it stands now, this body is a very long body, so this is not an IFC. We can just deal with normal order block from those areas. Now if we look at this area again, there is also a sweep at the lower section here, but look at the candle body, that is too much. That is not what we are looking for. So it is also, so in this bullish trend we can get a proper IFC here. If this candle, okay, was to break this guy, okay, and then that is where we would have considered someone here as that, but this is equal high. Okay, that is an equal high, so we cannot consider that. So now let's come to this area and see if we can get such scenario here. So this we are in a downtrend. Okay, now this is an internal structure. This is a valid pullback, and it's an internal structure taking the low. Okay, and then we can see this has swept this and then giving us this particular high before we took this particular low over here. Okay, now this is not a valid low, remember. Okay, this is not a valid low, but it is an internal low. Okay, now the next thing we look at is that we realize market came up. This is the high here. That high was swept and candle closed below it. The next candle came, sweep it again and closed below it. Now this guy, this bullish guy here, is the one we can use as our IFC. Remember I told you two things, that when looking out for our IFCs, we can use the whole body from here to here as the zone. But if we see that there is an mitigation, okay, of the body, then you use the wick. All right, so in this case we are going to be using the wick of this candle. Now remember, this is 15 minutes. So when we identify the IFC on 15 minutes, we have to go onto 1 minute to make our entry. Okay, we have to go onto 1 minute to make our entry. So we are in a downtrend, so we'll be looking to sell. All right, so now let's shift our this thing onto 1 minute. Okay, so let me look for that session. Guys, are you following? Is the concept clear? Well, after the lesson we will be looking at I'll be making more videos on these things so that you guys will understand properly, because during the lessons like this we don't have enough time to dive much into most of these things. I'm trying to locate the area. Okay, I think it's here. All right, so this is what happens when you locate the zone on your 15-minute time frame like that. I don't know if you guys can zoom, see, so let me zoom in so that it will show properly. All right, so this is where we located our zone. All right, remember we are in a bearish trend on the 15 minutes, so we'll be looking for single candle order block to make our entry. Okay, so this is the entire 15-minute zone. Okay, this is the entire 15-minute zone, but then we are going to break it down on 1 minute based on certain other factors that we'll be looking at, including change of character, flip, and all those stuffs. Okay, so in this case we see that price took out this on 15 minutes. Okay, we can see over here that price, after taking out this guy, it didn't create any proper inducement here, because this is the main candlestick. Okay, this guy took the high, so yeah, over here this is a valid pullback. Okay, a valid pullback here. Then within this leg over here, okay, within this leg over here, this our inducement area here. Good. So when price takes this inducement, is no, because we have jumped from 15 minutes onto 1 minute to make our entry. This is now considered a change of character. Okay, a change of character. We are changing direction. Okay, and now why did price react here? Because there is an OB here. Remember, this guy took the low, this guy also took the low, and between here and here we can see that this guy swept the high over here. Okay, so this particular OB here has been mitigated and there is no proper imbalance in there, but still price reacted on this guy. Okay, still price reacted here. Now the reason price reacted is because despite it being mitigated, it still have some power. Price reacted, went up, but if you see what happened here, you can realize that price didn't go deep and then it violated this demand zone. So you'll be looking at smart money traps. Okay, smart money traps, that is how we call them. Okay, demand zones that becomes traps for the smart money concept guys. So because there is a flip here and price has created an inducement over here, you look out for the proper zones within this guy that we can take entries from. Okay, so now based on our concept that we have learned, okay, there is something we'll be looking at called the single candle order block. Okay, now if you see here, this last green candle took the high of this candle, which validates it for us to use as an OB, but this red candle has already mitigated because there is a wick within it, has mitigated that area to make it not suitable for use in this particular scenario. Okay, so though you can still mark this area as a potential area of interest in the future, it shouldn't be something you should consider as a high probability zone to trade. So the next thing is that we will look at the next candle, because this took the high and this guy is the one that, how will I put it, is closest. We will consider moving the order block onto it. Remember, I told you if we have this guy mitigated, there is no proper if it's not unmitigated and it is mitigated, you move this thing onto the next candle. Now this green candle is within this candle, so the imbalance is between here and this top, so we have a little bit of imbalance between them. So this is the area we'll be looking at to take our entry from. Okay, so within 1 minute we can take our entry when price returns. So we are expecting price to form inducement, which it did over here. Price came down and went up, came down, now tap into our zone, and then we can sell from here. But today I'm not going to talk much about entry. I'm just showing you how you can locate an IFC and then make your entry on the lower time frame, but I will not talk into deep on how to make entry today. So here today, if you are taking your sell, always when taking your sell, you add the spread to your entry. Okay, so your entry will be a little low, then you add it a little to this, so just above the top there. This is GU normally wicks a lot, and then you put your TP at the low, the 15-minute low. Okay, so this is the low of 15 minutes. So here, and as you can see, price nicely, a second retest, and price nicely came, and then that's your TP over there, right? There are other entry points all over here, but I'm not talking about entry today, so I don't want to because we can make an entry from this area, which was the one that price took over, because this red candle sweep the top of this, which is a valid OB, because there is imbalance between that area. Price taps in and then goes down. Okay, we will look at that this thing when we are looking at entry models. So this an example of how we can identify IFCs, and then we make trade entries based on that. Please, any question? Any question, guys? I'm available for you guys. If you have questions, do well to unmute yourself and ask your question. Please, do we all understand?
No.
Yeah, Eric.
Yeah, good evening.
Evening.
So it's like for you to identify the IFCs.
Yeah.
You need to go check. One is a reversal, one is the reversal. Before you identify, check the gaps.
Okay.
I just want to know that. But I'm not sure that, but I think it's what it is.
Yeah, and we'll be doing these things because I'll be doing more videos on them. The more you continue to, because right now we've not put everything we've learned together yet. Okay, we've not put them all together yet. Sorry. So you have to rewatch from last week's lesson into today's lesson. You have to rewatch it properly, take your time to understand. Okay, so always these guys, these IFCs happens at the tops and bottoms of the chart, whether the internal structure or the main structure. They always occur at the bottom and the top areas of the chart. Eric, are you okay?
So how will you know that this particular place, what is happening here is the IFCs?
That's why you need to understand structure. If you understand the candlestick structure and the overall structure, you'll be able to identify the reversal points, the valid reversal points. And now I also told you that the IFC candles are the one that just sweep the high, those reversal points, the high or the low, and then their body close below where the high or the low is. So here you can see the body here close below this guy. That is why we make that trade decision. He only swept it and closed below it.
Oh. So if you see that, then you check whether there's a gap there.
Whether there is an imbalance.
Imbalance.
Yes.
Okay.
Then you go on to your lower time frame now to look for proper entry using the change of character or the flip model, which we'll be looking at after liquidity. You're welcome. Please, if you understand the topic, type yes in the chat so that I'll know that we have all understood before I close.
Please, I have a question.
Okay.
Yeah, so where
is that early?
So yes, that's me.
Okay.
Yeah, please, where we saw the IFC, the candle swept the top and then closed below.
Yeah.
But then afterwards, another candle also formed again. So would you have been looking for that? Okay, let me ask this way. That candle that swept again the top of the other one.
Yeah.
So means that it still makes it valid, even though it has swept the previous one and then closed.
Let me show you. The reason why it is valid is this. This one swept this, closed below, and then this one you are talking about swept this guy again and also closed below it. Okay, so it made it, that is what made this guy still valid. Remember I told you that if let's say this one was to sweep here and close candle body above, then this would have been considered a different thing when we were doing the BOS and co. Remember? But here, that's why when I was explaining, I just didn't want to draw the second line again. Okay, so here also it has what, it has swept that top there, so that also makes it valid.
Okay. Thank you.
You're welcome. Guys, if you understand, type yes in the chat. Type yes in the chat so that I know this evening's lesson has also been well and fully delivered. We have about 13 people on the call. Only got about 4 response. Is it that the rest of us didn't get the concept? All right, so guys, yeah, Arisha.
Hello.
Yeah, I'm listening.
My problem is after understanding the IDM.
Yeah.
Like moving from there to the change of character and break of structure, it confuses me. I don't know if I'm learning to forget or
Maybe, how will I say, you see, you are not confused. What is happening to you right now is how to differentiate when to use this as an IDM or when to use it as a change of character. That is what is the problem with you now, which we will solve it very soon. Yes.
Because watching the views, I still made some notes on them, and then I concluded that when the last pullback is spread out, IDM is formed, right?
Yes, for instance, especially let's say we are in a bullish trend, okay, and then the last pullback that is formed before the next high is then taken out by the newly formed high, then that is an IDM that is confirming this new high as the major high.
Please come again.
Okay, so I'm saying that let's say for instance we have market moving this way. Okay, I hope you can see my chart. So this was our previous high. So let's say we have this structure form like this, then later we have a candle close above this to form a BOS. Okay, then market move something like this and then comes and take out this low here, and then market move up again to close above this guy. So here like this, something like this, something like this. Please mute yourself for now. So we have something like this. Okay, let me mark. This is the high, low, high, low. Okay, now because we are in a bullish, you see that we are going up, that is bullish trend. So what is happening is that when price was here, when price took out this high, before it took out this high, it did a little pullback. This was the last pullback it did before taking out this guy. The next time price comes down here and takes out this low that was created here, before this new high was created, okay, then we call it IDM, because this IDM is what I will now confirm this as our actual high in, or our actual higher high that has been created. But let's say, for instance, when market got here, this point, then it went and took out this guy, okay, because market didn't come and take this guy before breaking this high, we can't call this our new, let me move it like this, we can't call this our new higher high. No, we will call it internal structure. Let's say this new high now take this guy like this and move this way, okay, and then now this when we can say we have a break of structure. So this one will be considered a single leg, okay, a single leg movement, and not an individual higher high. So now this will rather be our inducement and not here any longer, because this is not the last recent low before this confirmed high was created, and which means our new low will now be this place. Laurentia, please, do you understand? This is how we confirm IDMs. Come again.
I get you now.
Okay.
So how about the thing of character? Where would it be?
Yes, so
Is it before the
no, so with the change of character we have two types, okay. So let's say, for instance, we are in a bullish trend and this is our last low, okay, then before we know this, let's say this is our new high, instead of just taking this area to create a new IDM, okay, but it took this guy, created the IDM, then maybe did a little pullback. So this IDM now confirm this as our new high, okay, but then market suddenly takes out our last previous low and went lower, okay, so this is too much. So this is our last low, then market then took this low, then when it happens like this, we call it the structural change of character. It means we are changing from bullish trend into a bearish trend, okay. So this is our confirmed high because our IDM is here, okay, but then we now have a change of character based on the fact that market has taken our last previous low. This is the first type of change of character. Now the second type of change of character is, let's say, on the 15 minute, okay, like we saw in the example here. In the 15 minutes here, this is our order block. Here all is our order block, okay, our first order block. So let me mark this one. This is our first order block. Price swept it. Then we are now going into the lower time frame to make our entry, okay. When price sweeps sweeps an order block and creates liquidity, and then the liquidity now is grabbed by this guy to create our IFC, it is considered as a zone on the higher time frame. So now if we go to our lower time frame, okay, of 1 minute, which we did, then the first pullback, okay, which let's say for instance is this one here, okay, that was created, okay, this is the last distance. So let's say here, so let's say you tap on this higher time frame zone, the first pullback here, instead of it being an IDM on the lower time frame, will be considered a change of character when price takes that level out. That is for entry model. Are you still confused? Laurentia,
Oh,
are you clear now?
yes.
All right. So that is how to differentiate between the IDM and, so in this case, this one is no longer the IDM but rather the chalk, and the 1 year, okay, this pullback rather becomes your IDM, or what we call liquidity. Price took out that liquidity, and this also becomes liquidity over here. So because we took out this liquidity, we had a change of character. The next time price returns back to this zone or any area that we have a reversal point, and we enter here, then based on whether a flip or a single candle order block, we will take our sell from that point. So that is how you can differentiate between the two. Please, any other thing, so that we look at it quickly before we go. Very soon I'll start doing giveaways to those who are doing well. Once I'm done with the class and we start doing, yeah, Emmanuel, you can unmute yourself. I'll start doing some giveaways.
Yeah, good evening, sir.
Yeah, evening.
About the IFs.
Yeah.
Looking at the right side, where you have marked the liquidity, I mean that have been swept over there. Isn't that one also classified as a valid IFC? Because that one also have a long way and also cleared that high over there, and then it also close.
It cleared this high over here. Yeah, but this one, this is other block. This other block, this, because it didn't clear the high of a previous structure, whether external structure or internal structure. It just clear.
So that one they are the same structure, so it's not valid.
Yes, so it's valid as other block, but not as IFC. Yeah.
Okay. Thank you.
You're welcome. Okay, please, any other listing? All right. I hope you guys enjoyed today's class.
But I thought you said today you want to teach us the retail liquidity.
Yes, I wanted to do that today, but because the messages on the IFC was more, I had to treat it again.
Okay.
So the next meeting we will treat the retail liquidity, so don't worry, okay, because we have already spent 1 hour right now, so I don't want to make this longer. Okay, thank you all for coming. The video will be uploaded as usual, so just keep out your eyes on the channel. I'll upload the video there. Have a nice evening, everybody, and see you next time. Don't forget, go and subscribe to the YouTube channel and turn on the bell notification so that you'll be notified anytime we upload these videos onto the channel. Guys, enjoy the rest of your weekend. If I record any other video, I will send it to the platform for you guys to watch.